Hello traders, good morning, good evening, noon, afternoon, wonderful week. How are you today? How was your weekend, guys? Did you have some good rest? Refreshment? Very good to hear that, very good to hear that. Fishing? Lucky you, the weather here doesn't allow to fish. Well, unless we go for some extreme conditions. Alright, so once again, wonderful week to all. Already had a good start of the day. That's wonderful. We happy to hear that. Actually, the market is moving, which is cool. We mainly have the euro pound, which is in our direction from previous week, and the euro yen, who decided to break this important low, which we will go and talk about, of course. I can see some new names in the live room today, so welcome on board to all the new joiners. And as every Monday, so will be this one. We go over the whole list, which is a big list we have here. That's from the last report we've had, and we're going over our direction. So basically, what we do, we always prepare the entire week on Monday, and we go through all this list, and it's a follow-up. So we had our previous week reports. Now we follow up because the cycles don't change so frequently, just levels and sometimes directions, and this is why we actually gonna do that. Okay, so Monday is the longest session. I hope you have your energies. I hope you have enough coffee next to you, and I hope you have enough of the focus. Let's start, guys. Let's start with the. I will go according to the list of the report to make sure I don't miss anything. Okay, let's start with the euro pound. This is the first pair in the report. Just quick reminder, what do we trade here? So after we spotted this triple cycle on the weekly, right, we also spotted a false break here with a bearish divergence, and we said, come on, we are after sells. So our direction, our chosen direction in that case was sell. Now, there are two options here. If this is a triple cycle, we should go to the 50%. 50% will match with the Brexit zone, 08140, 08150. This is a dream zone, which I believe for long run would be reached again. Now, don't raise your expectation to make all this money by tomorrow. This is a weekly cycle, which means you can see by yourself where it started. It started at the end of 2015. We are now at the end of 2017. So I just want you to understand the proportions. But as per directions, this is the one that should be like a magnet for the bears. Then we start to dig deep, right? We choose the direction from weekly and daily cycles. That's what we always do. If we have anything clear and clean, we trade it on a daily time frame. What we've had is not really clear. The only thing we had on a daily cycle that was good here was this bearish hidden divergence, which puts the pressure for continuation, right? And on the 4-hour chart, we had this special cycle, 1, big 2, 3. Then we've had this double cycle and the breakout, which turned to be a range, right? And previous week, this was our view. As long as this trend line holds are not broken, bearish pressure remains on. So this doesn't change. This is our invalidation we remain bearish. Where do we aim for this pair? As long as it is below the invalidation. Now we need to do the extensions. If we do the extensions of the current cycle developing, what do we figure out? That we have a level around 0.87, we have a level around 0.85, and we have a level, believe it or not, but you have to believe it. That's what the market shows. What is this level, guys? Who can tell me? The same Brexit level that I just mentioned 2 minutes ago. And believe it or not, if we go for this triple cycle, the 161.8, you see the 161, will fit exactly with the 50% retrace, which is the target of the triple cycle. You see how everything started to come together, guys? Now, will that do that or not? It's not in our hands to decide or guess or value for the attempt or anything like that. We just need to follow, and we do. Our direction is bearish, and as long as we are below this invalidation level, our plan is to look for seller rallies. It does not mean we can jump in a sell on every single attempt. That wouldn't be too smart, right? It's like trying to shoot in dark and pray for hitting the target. No, every retrace with two waves. Basically what we need now is to trade on lower time. Very simple. Because the daily cycle is involved, a 4-hour chart cycle involved, we can now go and find entries for 1-hour chart or 15 minutes. Whatever the cycle, whatever the time frame of the cycle is involved, we can trade down to maximum 2 time frames below. This is a rule of cycles. So if we have a daily cycle direction, we trade 4-hour or 1-hour. If we have 4-hour cycle direction, we trade 1 hour and 15 minutes. If we have 1-hour cycle direction, we go back to 4-hour because 1 hour is not good for cycles. Well, it's good for a confirmation and for entry, not for analysis and directions by its own. All right? Questions? I am a big talker. If I don't stop, we can have the whole session about the euro pound. Any questions about this one, guys? Now, why it's so important to have invalidation in such plans? Because let's not forget it. We still have the weekly direction down. It doesn't mean we cannot go and have something like that. We can. And then another move down. Right? So for whatever is going to take on weeks, on the shorter terms, and 4 hours is pretty short when it comes to weekly, right? We can do whatever it happens, it would be acceptable. And this is why we have to be very, very, very hard and specific with invalidation levels. And if we go above or below invalidation levels, we must say, aha, Mr. Market doesn't want to provide me this move yet. Okay, let's wait for the next opportunity. Make sense? So that's all. Now, how do we actually, what kind of corrections could we have? Any two waves with a breakout of the trend line gives again a continuing momentum, or range. And then we're looking to sell false breaks or just retests on the top of the range. That's the only two ways corrective cycles could work. Only. There is nothing else. Which means if you have something like that, guys, let's say as a corrective cycle, this is a test for you. Okay, we have a move down, but then we have 1, 2, 3. Is that a corrective cycle, yes or no? Exactly. Triple cycle means warning. Only two wave cycles or a range acceptable for correction. 3 waves means that there is a good chance that now it will make something like that, which would be still 2 waves, but just in different bigger zone, different bigger view. Okay, so if you have 3 up or a special up, that's a warning sign from the market that hey, something is happening. And those of you who are with me for a while, remember the dollar CAD? We were looking while we were on the bottom for continuation towards 116. There was no sign for reversal at that bottom. There were no false breaks. There was no convergence. There was nothing like that. The only thing that was there is this 1, 3. We got this special cycle telling us simply, hey, Mr. Vlad, the correction is most likely going to be deeper. You want it or not, that's what's going to happen. And this is where we understood, guys, what? There is a great chance that we are going for bigger double cycle like that. Make sense? That's a saying from Mr. Market, and this is, guys, what I want you always to understand. When you get not 2 waves or a range as a correction, but 3 or special as a correction, it's time to admit that, oops, maybe the correction would not be as small as we would like, and it could extend bigger. And this is very, very important. So that's what I wanted to show you for today. Very, very important. And that's why we have very hard validation and invalidations. The next the 2 euro pairs we have, according to our list from the report. John, thank you for the talking part. Euro CAD and Euro Aussie. Euro Aussie, basically this one is, that's what we have. Let's go and quickly remind. We have a range, massive range from the weekly. Massive. Which means if we reach the tops, we can start looking for drops. Makes sense? Definitely. Right? It also could turn to be some massive dragon head and shoulders pattern. Right? We are still far away from that, but it's something to remember. If we start to measure the weekly cycles, we figure out that we have the 61.8 in play, and we have a bearish divergence. That's interesting. And then we drop to daily chart, and on daily chart we also have the duplication to 61.8. Another interesting sign, right? The divergence is also there. Now, we did not yet go below any of the trend line, and we did not yet create any lower lows on the 4-hour chart, not even 1-hour chart yet. Nowhere yet at this stage, but this pair seems like it's trying to make some kind of triple movement. If it will manage to do that, this is a saying that we are for sells. Right? That will be the saying from Mr. Market, that we are for sells. So our momentum is, without any doubt, bearish, since here this is the chosen direction by Mr. Market, and if it will manage to make one more leg down, we will start to look for 2 waves retraces or a range, because that's the only 2 possible ways for the market to correct, and we will be looking for the retraces. Right? This is basically what's happening with this pair. Now here where it becomes a bit tricky. Why? Because the first target is the target of the daily cycle, which is the 38.2 here. That's 150. The next target would be 147. So the moves there are not really huge like we have in, I mean, the ranges are not really huge like we have in other pairs, but they definitely could provide some nice opportunities. EuroCAD, same story. Weekly range, almost duplicating each other, right? The only difference between these two is that on the daily view, it's also stuck inside a range. This smaller range. So EuroCAD, as for now, both directions are completely acceptable and tradable. We can easily continue higher to the top of the weekly range. We can easily go all the way down to the bottom of the daily range, which means both directions are tradable. This is definitely not the most preferred pairs, but if we get a clear, clean trading setup using the systems, any systems you trade, because the cycles are hard to be read. Right? As for cycles, the read here is more difficult. As for systems, as long as the moves are clear and clean, which means basically like everything here happened by far. Right? These are clean moves. This would be not clear moves, right? As for now, everything here is clear. We have clearer, higher highs, higher lows, spiking highs. Everything here is clear and clear. So while that continues and goes on, both directions could be tradable by the system, by any system you use. Euro Kiwi. Now here is a beast. On the previous week, we have been running up. And we enjoyed the rally all the way to the target where we said for the short targets, right? We would be aiming for 171, 172. This is exactly where we got the stop. The question is, what's now? Now, the momentum is without any doubt bearish. But let's stop for a second. And I want to ask you guys here, do we have any bearish reason by the market at this stage? Which means, what is a bearish reason? Two false breaks, right? Two false breaks and convergence. Do we have it? Do we have two false break and convergence? Or alternatively, do we have three waves down or a special cycle down? On 4 hour we saw we didn't. What about 1 hour? Do we have it, yes or no? Let me enlarge it a bit. Now the picture is a bit clearer for you. What do you think, guys? It's a challenge, so let's see who is up to this challenge. Take a look on the chart and answer. Do we have here two false breaks and convergence? Or three down, two up? Don't be afraid, guys, to answer. Don't be afraid. I'm not going to judge your knowledge according to that or give you grades. No, it's for learning purposes. So Dialan says no to up, 100% correct. But do we have, first of all, before we deal with three waves down and two up, we still need to see three waves down. Do we have three waves down, yes or no? No. The answer is correct. We do not have three waves down, even though this looks like special cycle. This isn't correct. Why? Because of the two candles rules. The last two candles in this down move, which was this and this, the last high was not broken in this correction, which means this is not a correction. So this is just one move down, right? Now, we don't have 3 and 2, right? But let's see if we have two false breaks. Do we have one false break? Well, the answer would be, we have it right here. Right? We have the divergence, which is a must for a false break. We have this high, which is valid. We have this correction, which is valid. The last 2 candles rules applied. Right? We have a false break. That's good. What about this false break, guys? Remember, we can have 2 false breaks. 2 type of false breaks. One horizontal, one trend line, alternative trend line false break. Right? So do we have it here? Yes or no? Exactly. We have it. The Alan, exactly. We have it. You see that, guys? So now we have 2 false breaks. Let's answer the next question. Do we, and this is tricky, so please have your attention. Do we have a convergence here? Be careful with the answer. Be careful with the answer, because this is our low. Don't just shoot an answer. Think about it. So everyone says yes, by far. Does anyone have opposite view? Does anyone have opposite view? Will someone say no? Thank you for that, John. All right, here we go, guys. Here we go. Divergence is here in play, not a convergence. Okay, now why it's important? Because the convergence that you see was to here, and that part that was obviously a convergence idea. But did we have a new low here on the chart? No. Therefore, it is not a convergence. The new low that was created by the chart was here. And at that stage, it's not a convergence anymore, which means lower lows. It's now higher lows, which means a bullish divergence. Therefore, right, what's the plan here? We still had 2 false breaks and lower lows. How we still can apply that? The answer is easy. We need 1, 2, and then a trend line breakout, and then, only then, we can start looking for sells again. Or, what's the alternative for us? Range. Always like that. Always. That's the only 2 options. So we can start having this, and then we would be looking to sell the tops. Why it's very, very important to have this plan and understanding? Because what could happen is wave number 1, wave number 2, which will just go and continue all the way for new highs, and this would never be triggered. And then we never have a reason to go for sell, and we would be safe. And if you remember, again, those who are in the room for a while, remember this scenario right here, guys, on this place. What did we have right here on the 4-hour chart? Take a look. We had 3 waves down. Sorry, was like that. And then we had, which never was broken. And then just continued for new high. And then we had the same scenario exactly right here on the 1-hour chart. we had this triple cycle, and then we started to have 1, 2 developing, which never was broken down, and then we had new highs. And then we were just saved by the wrong decision and wrong momentum that seemed to be correct. This is why we must remember what I always say, that guys, timing is everything. Timing is extremely important. We must be in the correct read. If the conditions are not perfect, the chances for us to end up as a winner are lower. Very simple. Right? Many times we actually surprised, but it had divergence, but it had a level, but it had a convergence. Why did it fail? And I always say that trading is built from 3 steps. Step number 1, a level. Step number 2, a confirmation. Step number 3, a valid setup. If you don't have all the 3, you don't have a good probabilities trade. And there is a good chance it's just a trap by Mr. Market. Think about all the times you were falling into this trap. Now, there is no guarantee that even though everything is 100% correct, it will end up as a winner. But there is a guarantee that this is the best starting point. And if it is the best starting point, it means simply that the chances for us are bigger. And that's what we need. That's what we need as traders. Very simple. So Euro Kiwi, the momentum is bearish. Do we have a reason to trade? As for now, we need first of all these 2 breakout. Now on these 2, there must be divergence, right? Ending bearish divergence, and then we can start looking for the sells. Good? Clear? It was a very important example that I wanted to show for today, guys. That was the most important lesson for today. Is that okay? These little things are confusing, I know, but this is why it's important for me. You can see that the market always provides us some important lessons, to some examples, right? These examples that we don't pay attention normally to, but we have to. And when we have it, I really want to stop everything and before continue the list, explain it. And this was very important for me to go and explain it to you guys so you understand, and go back in time after that, start to think about all these situations where you just said, but there is a divergence, there is a convergence, and it must work. How many times you try to convince yourself or the market that this is what's going to happen, right? Remember, never try to convince the market that you are right. Why? Because the market can bite. Listen to the market. It knows better. Always. Alright? So Euro Kiwi, we are bearish for sure as long as we are below these highs. But we do need some better conditions. Okay? Before we hit it. Alright? Very important. By the way, very good news, guys. We start to... Well, I already started that. And now one of the members actually helping me to create it develop it as a tree of scenarios. We are working on a roadmap of scenarios for the cycles. It's extremely comprehensive and complicated thing to do. That's why we examine all the possible scenarios, and we kind of prepare a roadmap. So you will have like a close guide to yourself. So this is what I have in weekly. This is what I have in daily. This is what I have 4 hour. How can I trade on the 1 hour? So basically, like a daily guide for you, and all this jungle that is called money flow directions. So it will take some time, but that's the good news I have for you for today, guys. I've been discussing and learning this idea lately, and we're working on it. So once it's done, you have it. Another good reason, well, it's not really trading Bible, John, but it's a very, very, very important thing, which again prove why it's good to be in Traders Academy Club. We make it a real academy. Step by step, we make it a real academy into trading. One day we will be in the universities, right? Next one on the euros, euro yen. Now this one is bearish. Why? What's the difference between this one and all the others? Triple, special, lower low. Something that we didn't have on the Euro Kiwi, for example, yet, right? Now we do have it right here, building up, live. See that? Developing for us these beautiful conditions. Lower lows. Now on the 1 hour chart, this one is behaving like a special. I would say even very, very special. One of a kind. Which means it's perfect to sell rallies as long as this top holds. Right? I know many of you are riding this and many of you are riding this for good. For good after this breakout and the momentum that was gained. So those of you who are inside, what I could suggest here is because of this cycle that is developing and the fact that we do have Bollinger Band duplication on the 4 hour chart, we do have a massive supportive area on a daily chart, and the 1 hour chart cycle, I would at least move to break even. In better conditions, even make sure to cash out part, because the risk reward is already great. So making sure we are not giving back to the market. And every rallies we get in that point are valid bearish count signals, setups, call it whatever you want. What time frame should be involved? 4 hour and 1 hour chart. Why? Because it's daily and 4 hour chart cycles. So we need 2 waves up or a range on the 4 hour or the daily. Okay, so something like that. 1, 2, and then we can start looking for the sells. Does that mean we can start looking for the buys now? The answer is it's possible. It's possible, but we don't yet have any false break. Not 4 hour, not even 1 hour. We don't have even on 15 minutes nothing like 3, 2 breakout. So the answer is most likely we will start to face up some kind of bullish corrections to provide us later on sell signals, but we don't have any reason on earth for a buy yet. So for those of you who just love to call the bottoms and love to catch these spikes, careful. There is a good chance that this is just not there yet. All right? So that's for the euro yen. It remains bearish for us, and this is our direction. Euro dollar, same story. No change. We are going down. Nothing changed here. Now the only thing we need to pay attention to is this bank zone. See that? This is what we have here, guys. This zone would most likely start to make some troubles for the sellers. I believe that during the coming days we are going to see some slowdown here and then turn around. So for sales, once we start to get some divergence, 4 hour and 1 hour combo, we then can start to be a bit more careful and cashing out. Now, as for now, we have the investment report. This one, where is my report? here. Let's open that. We have this report. You can find it inside the normal trading report. There is a link, right here. Investment. We have this report, guys, for you, right? And here we have our 115 as a final target from the 119 we had. We cashed out partial 117.33. We are looking for the 115 as final target, final destination. We might close that a bit earlier. Well, all depends on how the false breaks and divergences would actually get developed. As for now, at the beginning of the week, we have no reasons to change nothing, and it all remains yet bearish for us. Any questions, guys? I just want to remind you where it all comes from. Okay, so you remember the picture. We had this. And we had two false breaks here. We had a monster divergence, right? It was pretty classical by the book situation. We have head and shoulders from equal levels. Rare conditions for the pattern. Very good, strong conditions for the pattern as well. And on the 4-hour chart, what we've had here was 3 down, followed by false break, and a range. Then we got a breakout thanks to Mr. Draghi, and as long as we were to hold the lower highs, we remain bearish. So we are still in a bearish cycle. That was just a quick friendly reminder for you where it all comes from. This is our invalidation zone. Daily and 4-hour are in play. What cycles could be traded and useful for retraces? 4-hour and 1-hour. What type of retraces can we have? 2 waves up or range. And then we sell the top of the range, right? That's the only conditions and only acceptable scenarios we have for corrections. We have them, we can use them. We don't have them, we cannot use them. Very simple. We don't need really overcomplicated from here, because that's all Mr. Market gives us. We have it, we can use it. We don't have it, we cannot use it. Can that be simpler? No. Can that be more complicated? Yes, if we insist to make it more complicated. All right, so euro dollar, and the next one and the final one we have for the euros is the euro versus the franc, which is also in a not clear conditions. Why? I still think we are going down because of this triple cycle on the daily, and we had 2 false breaks. 1, 2. It's really, really cool. It's really, really good. It's really, really powerful. But we don't have yet any trendline breakout. We don't have yet any lower lows. And we don't have yet any convergence. This one looks like a convergence. Is that valid? No, because this is not a low. Why this is not a low? Let's zoom in a bit. Why this one is not a real low? Very simple. Let's look on the last 2 candles of the up move from here to here. What are the last 2 candles that answer for us on the conditions? Higher highs, higher lows. This is the last high without any doubt. What is the last important low? And I claim this. Why all these inner candles not important? Because they are inner. They don't create higher highs. They don't create higher lows. So they are not important. So this level had to be broken. Was that broken? No, it was not. Therefore, can we use this conversion? No, we cannot. Let's see what we have on the 1-hour chart, because the daily chart was in play. Does 1-hour chart have for us 3 waves down? Yes or no? The answer is again no. It doesn't. Does it have a special cycle? No, it doesn't. Does it have a range as for now? No, it doesn't. So what it could turn to be, guys? Easy. Easy. Just a double wave correction and continuation up. Okay. Now here why it's important, because on the previous week, we did have, after the beautiful rallies, right? We did have here a convergence after this false break and this false break. Sorry, not this false break. It was this false break. Pardon. From the 4-hour. After these two conditions, we got the convergence, we got the sell rallies, we got the bearish momentum which we could enjoy from. But now, this bearish momentum was really provided and was really pushing down into two waves. Do you see how it develops, guys? So a bearish celebration from previous week now running by the end, and we have a bullish divergence now. That's a way from Mr. Market to say what? Hey, Mr. What's happening? There is a good chance that this is your low and we are going for new high. That's basically what Mr. Market is trying to say. Is that clear, guys? Alright? So this is very, very important. Euro franc now is back to both. We had a beautiful run down here. Now after two waves, it's back to both. Why? Because if it doesn't develop into triple, 1, 2, 3, then it will stop as double and continue for new high. Or it will start to develop here some big range, but it's too early to judge. It's too early to judge something like that. Alright? You see how it goes from scenario to scenario on the 1-hour chart? Okay, guys? So Euro franc is back to both directions, tradable, correct, and acceptable. If we go higher, our next levels to watch 118, 119, 120. Where from? I don't think it will go higher. I believe that the Swiss bank will take some action from these levels if and when they would be reached. We are done with the euros. Let's continue to the pound. Pound dollar. According to the triple cycle we've had here, triple or special, doesn't matter how we look at that, which by the way has no divergence here, only extreme, but the weekly triple was with much clearer divergence for us. This is divergence. On the 4-hour chart we had 3 down, 2 up, and now holding the possible continuation down. For us the read is very simple. We are bearish as long as this top holds. This is our current invalidation. What do we expect from this pair as long as the invalidation is in play? We expect the pair to be able to give us 61.8, which is around 129 zone, or full duplication, which is around 127 zone. Will that give us these conditions? We don't know. This is why we currently are bearish and we have invalidation zone. And our invalidation zone for only bearish is here. Break above this invalidation would make this pair again to be in both direction possible tradable. Why? Very, very important why. Because if we go for the higher time frame where all the journey starts from, we remember that we've had a triple cycle here. That means that we can go and rally all the way to 140 and 145, the 38.2 and the 50 from the weekly cycle. And this is why, for the long run, we really want these pushes lower to provide us the next monster buy. We are not there yet, and therefore the bearish pressure. And we have to be very specific with invalidation, and our current invalidation is right here. Questions? Is it possible Scorpio say buy this morning? Of course. Scorpio means on the current flow of the moves, right? So of course, if we have a bottom here and a bottom here, this short term, well, we don't have any bottom here, but the short, we do, because I changed the conditions here. It should be 2, 3, 6. We do have a bottom. So the answer is yes, the Elan, of course. We had a bottom, we could have this rally, and which is more than welcome. Why? Because it could provide again future sells, right? So the answer is yes. And our invalidation is here. Break above the invalidation, and we are back to both directions tradable. Make sense, guys? All right. That's for the pound dollar. The next one of the pound is pound franc. And pound franc, you remember my view, I was looking for sells. I wanted to see this trend line to be broken for long-term sells. I wanted to see this trend line to be broken for short-term sell, and it was never holding below. Never. Instead, we are getting very close to the invalidation. We are still not there, but it's coming. Invalidation above this level will simply make this trade into both directions possible, tradable. Why? Because again, here comes the long-term cycle, right? Remember these guys, like the pound dollar. So we can easily rally towards 137, 138, and that's why it will come to bullish again, both again, and with a bullish current momentum. So keep an eye on the pound franc for possible invalidation. Now, all the rest of the pounds. Pound Aussie remains bullish. We did not have any invalidations, which means no false breaks here, no convergences, not on the 4 hour, not on the 1 hour. Instead of that, what did we have? As for now, 1, 2, with a bullish divergence, which means further rallies are acceptable. Every drop at this stage, as long as we do not have 3 waves down or false break with convergence, we are after buys. So as long as we don't have false breaks, convergence, or 1, 2, 3, 1, 2 breakout, as long as none of these conditions happen, there is no reason for buys. So pound Aussie is still bullish. We reached our first term targets from previous week. We were bullish here, and we got our 61.8. It's right here. Next one that we would follow, actually the first target for us was here, right? This one was reached. Next one would be the full duplication and the weekly range, which is right here, 175. So as long as we don't have any invalidation for the bullish run, it remains bullish. Pound Canadian, same story. No invalidations for the bullish run, which means this pair remains bullish as well. What's invalidation again, guys? False break. Do we have any false break on this run? No. Do we have any convergence on this run? No. Do we have any 3 waves down and 2 waves up on this run? Who can answer my question here? No, we don't. Not at this stage, right? So therefore, it's only yet bullish. Every 2 waves down to be provided could still use us for the buys. Pound Kiwi. Now this one is a bit more tricky. For long run, we are going here for 2. We discussed about that. For short run, on this one, we do have triple. Where is that? Hold on. I might be reading wrong here. Yeah, this one is not low or low. No, we don't have yet here. I got different view here in the morning. One, these 2 candles were not broken, invalid. These 2 candles not broken, invalid. No, we don't have any view for triple cycle here yet. Therefore, we need basically every two waves for us could be buys. 1, 2, and we can continue for the buys. Okay, so nothing yet here provided us the validation or invalidation for the bullish run. For us, we continue higher. We need, because this is a weekly cycle, we need false breaks on daily and the 4-hour chart. Do we have on daily false break? No. Do we have false break on the 4-hour? No. Now the daily, we can say this is a double cycle running to the end, right? Then we need 4-hour or 1-hour false breaks and convergences. We do have a false break here. We don't have yet any convergence. We don't have yet any triple wave down. Therefore, no bearish reasons. We need 2 waves down and buys. 2 waves down and buys, or bottom of the range. That's all the conditions we need in order to join the buys. Right? So for the pound kiwi and all the rest of the pound we just spoke about, pound Aussie and pound CAD, pressure is yet bullish. Final target for pound kiwi, 2. Well, it could even go higher, but at this stage we are aiming 2. A very psychological monster level. Pound yen broke the trend line. Where is my pound yen? Here we go. Broke the trend line, and as long as this high holds, this is the trend line we have. As long as this high holds, the pressure is bearish. I would expect this. So as long as we are below this high, the pressure is yet bearish. As per levels, we need the extension of this cycle developing, and that's our levels. The bottom of the previous level, 147, 148 more, and then 145. Final could be 142, which would also fit perfectly the double cycle here from the bottom to the top, 38 level. So there's a great chance if we reach there, we're gonna fly. I have my reasons to be doubtful about possibility of that at this stage as for now, but we don't dream so far. We are trading here now, today, this week, and this is the invalidation zone for us. Now guys, I want to remind you, this week is ultra important fundamental week. We have here very important news coming this week, and that starts with the monetary policy statement from Bank of Japan. Then it continues with consumer confidence in the US, all related to the pounds. We have manufacturing PMI, we have the ADP, we have all the news from US as well, and we have the official cash rate in Britain, who expected to raise the rates. That's a pretty bullish pressure on the pound. So if the pound manages to give us this little push before the news actually coming out, it will be an amazing buy opportunity. Okay, so as you can see from all the pounds we saw, pound dollar is the less clear one and tricky because it's still bearish with this invalidation, and all the rest, pound Aussie, pound Kiwi, pound CAD, are much clearer. Or even the pound franc if invalidates the daily top. Okay, so keep an eye on that and trade where it is clear. Very important. So we are done with the pounds. Let's continue to the majors. Dollar franc, dollar CAD. Dollar CAD reached our corrective cycle level we wanted, 129, 130. We were aiming during all this rally to 127, which was reached previous week, and 129, which was reached on Friday. We are here now, ready for the retraces. Okay, as simple as that sounds. This triple cycle down move also fits the 50%, 129, 130. Get ready for sells. How? We need a false break. Do we have any false break? We don't. Do we have any convergence? We don't. So, do we have any reason for sell? No, we don't. So we are waiting for the false break to happen, right? Two in a row would be, of course, the best and the beast. Lower lows, and we fly down. But one false break would be acceptable. Why? Who can tell me why one false break would be enough in this situation and not two? Who can tell me? Because normally when we go against, we need two false breaks. Why here one false break would be enough? Exactly, John. Exactly. Because we are with the weekly direction. Right? With the weekly direction. Our main cycle from the weekly, actually it was more like a monthly, was still this. Right? So we could expect that lower 116 would be our beast level. Right? Well, there is a great chance that it's not over yet. Plus, we were hitting here 61.8. We never managed to reach the 100 yet. Now, why this 61.8 wasn't really too good for a finale? Because this leg was 15 candles, this leg was more than 15 candles. It's not suitable for 61.8. 61.8 should be twice longer or twice shorter. It was almost the same. Therefore, we cannot accept that. So it's with the weekly. Weekly create a bearish hidden divergence now, which in simple words means if the buys are really running out of the steam and the bears will take the control, which is very likely to happen from this zone, it's going to be powerful. One false break would be enough for us. So we need false break and convergence, or false break, 1, 2, 3, 1, 2, breakout. And then we are bearish. Should we remain bullish at this stage, guys? Yes or no? Should we remain bullish at this stage? Who can tell me? Who can answer me this question? That's a good thing. Yes, we should, and that's true. Yes, we should, but remember, this is aggressive. Why this is aggressive? Because we did reach levels. Now, we know that levels and without confirmation and without a setup means nothing, right? But we do need to be more careful here. That's the only difference now. So if on all this ride up from the bottom of the range, we were screaming together, buy, 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 it's obviously a buy. Now it's time to say, hold your horses, choose your positions, right? It is yet a buy, but we must be careful. We must be more conservative in our risks. So we cannot go here and take the regular risk we always would. We must be here more conservative in our risk management. Okay, that's very, very important. All right, great. Thank you for the help, guys. Dollar franc, basically same story. We enjoyed the rally from previous week. Do we have any invalidation? Currently, we don't. We simply don't. We don't have false break, we don't have convergence, we don't have three waves down. So it is still bullish. Currently, we don't have any invalidations, which means every retrace down in two waves, 4-hour or 1-hour chart, we can look for possible buy opportunities. Of course, if they are valid. All right. And dollar yen, now we don't yet have a trigger, But if we go below this low, we are back to bearish. Why? Two false breaks, convergence. If we go below this low, guys, our bearish journey to begin, which means we become bearish in our expectations, and this would be our invalidation level. So currently we're still neutral, but triggering below 113.32 would means an alarm for good morning bears. Questions about the dollar pairs. And I want to remind you, what do we trade here? We are still inside this range. Okay, and we are still on the top of the range, bearish divergence, and a massive candle pattern here, right from the 114. Any questions here, guys? I believe it's really obvious and clear. And still let me know if you have anything. No? Perfect. That means everything is clear. Just a second, please, guys. Okay. All right, let's continue then. So we're finished with the with these majors. Let's continue to the Pacifics. Aussie dollar reached the levels, but as we know, level without confirmation, without a setup means nothing. It means like a green light without the cars stopped. We cannot cross if the cars still go, even if it's a green light on the traffic. Do we have any false break? No. 4 hour? 1 hour? Not yet. Simply not yet. Therefore, it's good to be ready for buys. It's not good already to make a buy, right? Now we want to join the weekly cycle. Weekly has a trend line which still could go and get visited a little lower around the 0.75 zone. That would be ideal. It would also be bend to bend, right? And again, it's developing divergence. So the bulls are probably to come. The bulls are probably waking up. Do we have them in play already? No, we don't. Should we trade it already? No, we don't. Therefore, the current momentum remains bearish, but exactly like with the dollar CAD, because the levels are there, we apply a more conservative approach. You remember previous week we said that as long as we are below this trend line and no invalidation levels, we must be more careful. Now, after this move down, we're kind of developing here something like that on the short-term view. We have to be very, very, very careful and conservative in our pickups. New Zealandian dollar, same story, reached the bottom of the weekly range, and it still means nothing, because theoretically speaking, there is a good chance that New Zealandian dollar is going to revisit its trend line on the monthly time frame, which means 61.8 of this. I know it sounds crazy at this stage, but it's more than doable and more than possible. So, do we have any reason for buys? We are on the bottom of the range on the weekly. Daily, it's 161.8. There is a level. There is no current confirmation with a divergence here, right? Nothing at this stage. And this is what it probably means, that the bears are still not over and we might get a deeper push. No reasons as for now. Do we have false breaks on the 4 hour? No. Do we have false breaks on the 1 hour? Yes, we do. Do we have a convergence on the 1 hour? No. Do we have 3 waves up on the 1 hour? No, no, no. Bottom line, do we have a reason to buy? No, no, no. Same with the Aussie dollar, the Alan, okay? Of course there was a bullish divergence, so what? So what? As we said, level, we have. Confirmation, we have divergences. Setup, do we have? Fallsburg convergence or 3 waves up, 2 waves down? No, we don't. Can we trade? No, we can't. Very, very simple. Okay? Alright. Let's continue, guys. A bit of the Pacific crosses. Aussie yen remains bearish for us. No changes in our view. Again, no falls break, nothing against us to avoid the sells. We are pushing lower our targets. Boom. Target number 1 in play. Congratulations. Final is going to be 85. Okay, so we remain bearish here with first target reached. Very simple. Aussie Kiwi. We accepted the bearish correction down. We need 2 deep waves down on the 4-hour or daily before we again looking for buys. So that's why we accept both directions with the current momentum bearish. Invalidation for bearish is here. Remind you guys, we had a monster run to the upside here all the way to 113. That was a really, really, really amazing boost. Now we need 2 waves down before we continue the bullish run to the 116, 118. Okay, so that's why we accept yet the bearish short-term correction and direction. This is the invalidation, of course. Aussie franc still remains in a daily range. This is why this is here. So we are after buy bottoms, all sell tops. This is the plan. It didn't change. It's really not the best pair to trade currently because it's on the middle, not the top of the range, not the bottom of the range, exactly the middle. Aussie CAD still stuck inside this one candle range, so it's a very aggressive trading with buy bottom, sell tops. Very aggressive trading. I keep my view mainly neutral here. Again, if we have anything very, very obvious on the top or the bottom, we can trade it. But as general, this is really not the best pair to trade. And that's very important to understand it. Very important to understand that because I've been asked about this pair many times in the previous week. And I really try to understand why. Is that the best pair to trade? Is that the clearest scenario we have? Of course not. Why would we trade something that is just not ready? Doesn't make sense, right, guys? New Zealandian yen remains bearish, unchanged for us. Where is our Kiwi yen? Kiwi yen, Kiwi yen. Here. We have 2 targets. One is right here, the 76 zone. One is right here on the bottom of 72 zone. Oh, we remain bearish here. New Zealandian franc is still in the range for us. So both directions are tradable. We are now on the bottom of the range, by the way, with the daily cycle duplicating. 1, 2. Bullish divergence developing. So we can start looking for possible buy setups from the bottoms. Do we have anything yet? False break, we do have. Convergence, we don't have. On the 1-hour chart, do we have triple? Let's see. Yes, we do. 1, 2, 3. Do we have double down? No, not yet. So we have 1. If we have 2, we can then start looking for the retraces to the upside. Okay, so keep this one on a possible view as well. Kiwi CAD. Let's see what we have here. Kiwi cut. 3 waves down. Oh wow, interesting. Bullish divergence on the daily. 4-hour double cycle, false break, and oh, again. Is that a good convergence, guys? Yes or no? That's another good example for today. Is that a good convergence? Yes or no? Help me out here, guys. Exactly, beautiful. No. Why not? Because this is where we got higher. Do we have higher highs on the chart here? No. From here we have a bearish divergence, therefore not useful. So what is useful for us in that case? Because the daily has a triple cycle, 4-hour has a false break. What is useful here? When it's triple cycle up, do we have 1, 2? We don't have 3. What can we have? A range. And therefore, if we get, because range is an ending cycle, right? Range is an ending cycle. So we had one false break on the bottom, one false break on the top. If we have 1, 2 breakout, we can look for buys and flies. Make sense? That's all. We have it, we trade it. We don't have it, we don't touch it. Very, very, very simple. Could that be simpler? No. Could that be more complicated? Yes. If we insist to make it more complicated. We need clear scenario. We have it clear, we can trade. We don't have it clear, we cannot trade. Exactly like with closes. We have it clean, washed, we can wear. We have it ugly, dirty, smelly, we cannot wear. Or, well, we can, but it would be strange, right? It wouldn't make sense. Same here. Same here, guys. Remember, could that be simpler? No. If you have your specific conditions. Could it be more complicated? Of course, yes. It's all in our head how complicated we can do it. Now I want you to, again, to explain this condition, guys, because this is an important lesson. 3 down. 1, 2, 3. Okay? You can see that clearly on the 4-hour chart, obvious waving down. On the weekly, we are very close to the bottom of this range. Okay? False break occurred here. Now, what kind of reversals could we have? False breaks, convergence, 3 up, 2 down, or a range. It is our corrective cycle. Corrective cycle, right? And we do have the possibilities for that. So if we can get 1, 2 and hold breakout, we have a possible fly very high. Clear, clean, good, understandable. Why this is a false break, guys? How do we define a false break? First false break in the direction of the previous trend, which is down. So it was trying to break here and failed. Second false break, or in the same direction or in the opposite direction. In our case, opposite direction. So it was trying to rally and failed above this high. It makes it a possible range. 2 false breaks in a row makes it a possible range. Alright? Eyes on this one, guys. It starts to be interesting. And the final one we have, this is for investment, dollar ILS. Now, wow, 354 was reached so fast. Need to think what's happening here. Let's see, 4-hour. Well, basically we still want to go for the investment buy here. That's the bottom line. But now quietly I'm not sure, because this is the top of the range. And it starts to be very tricky. So probably I'm going to remove we had a 350.50 as a buy limit for investment here. I'm going to remove that. it becomes not as good as I wanted it to be. The plan was 1, 2, 3, breakout, retrace, and enjoy this buy. We couldn't. It was just flying all the way up, so it's time to say that's not what we wanted. Time to let it go. Remove that, guys. Those of you who have it, remove that. Those of you who not, I will go for the updates on in the report and in the room. Okay, this one is removed. Gold and silver. We don't yet have higher highs, therefore the pressure for this remain both. Okay, for both silver and gold. Okay, oil reached our 354. So all those of you who asked me about the oil all the time here, can we sell? Can we sell? Can we sell? Here is your answer. There is a reason why that was a magnet. Right, guys? It's a reason why this was a magnet, which was reached by the 54 zone. We've been talking about this 54, I don't know how long. Weeks by weeks now. We reached there. Do we have any sell setup? Do we have any false break? 4 hour? No. 1 hour? Yes. Do we have two of them because we are against weekly? Do we have two of them? No. Do we have convergence? No. Do we have 3 waves down, 2 waves up? No. Therefore, no reasons for sells yet. But we reached critical level. It is yet bullish, but stay safe. We need very clear, obvious 2 waves down here before we buy. Stay safe and apply here conservative approach. And the good news, guys, dollar yen. Oh no, it's not yet. Coming close, coming close, coming close. Come on, break it. Break it, give me this convergence. On the 4 hour chart, it could be good. Then we will need 2 waves up and sells. It's getting closer and closer. Okay, natural gas, another one we have. We are looking for buys. We don't yet have 2 waves. This is only 1 wave. So if we get another one, we can then looking for buys. Rebuys actually, because we got all the way down to break even ourselves on the previous attempt. Indices, we don't have yet any evidence for sells yet. Therefore, we are still in a waiting zone doing nothing. As simple as that. We only go with the stocks which are continuing the rally. Shake Shack going well, Ralph Lauren going beautiful with us, Nike, which we cashed out the first part around 54, reminding you, hold your break even here. No reason to lose on this one. After cashing out partial, no reason to lose anything here. Google. Remember our triangle, guys? It's still celebrating. I would be very careful here still with this weekly divergence. I would not join this party. It feels fishy. It feels very, very fishy. Now, 2 ways. Or I'm the fish, or the market really smells bad. I wouldn't do nothing here. As simple as that. It doesn't have any reason. Deutsche Bank, which we are long still with this invalidation. This is our invalidation level for the buys. We closed previously first part, so we are basically risk-free here. We have Veil, which we want to see one more low, right? One more low or bottom of the range. We are now on the bottom of the range, so we need this trend line. We have the trend line breakout, we have the entry. We don't have a trend line breakout, we don't have an entry. Okay, so this one is on our list for a watch. And TripAdvisor, We need a trendline breakout. We still are far away from that. And we have the new one on the list, and that's the Heinz. But for this, we need higher highs, which we still cannot gain. Let's see. We also don't have this trendline breakout yet. Let's see where it takes us from here. And that's all. That's all, guys. Now, all the this world of cryptos, keep an eye on this possible second false break for Bitcoins. It might be a saying that something is happening and something is coming. This could be some deeper correction for this special cycle. Second false break, trendline possible breakout, lower lows, bears could wake up. It's not there yet, so of course no reason for sales, but we have to keep an eye on that. Ethereum on the parallel view, stuck in a range. I want the bottom of the triangle to buy that. It would be ideal around 260, 250. Same with the Ripple, same with the Dash. This one doesn't have triangle, but it does have two waves developing. And Litecoin, basically same story. I would want to see that in a second push down to here and start developing the buys. That's all. Long session. The entire week is prepared. Keep an eye, guys. We have the euro pound going beautiful. The rest of the pounds going beautiful. Keep an eye on that. Yen pairs, of course. And oh, we forgot this one. Sorry, guys. CAD franc and CAD yen. Sorry. CAD franc, CAD yen. CAD franc remains in a bearish momentum while we are below this high. And as long as we did not break this trend line. So the pressure here remains bearish for CAD franc. We expect 38.2 and 50 of this daily cycle. So 0.7650 down to 0.7550. And CAD yen, we are of course bearish here as well, aiming the 38.2 of the daily cycle, which is coming live almost. And the next final target would be 38 of the weekly, which is 85. That's all. Thank you very much for being here, guys. And I wish everyone a wonderful week. I hope today's lessons were valuable. Every time the market provides us the special conditions, we have to cover them. We do. Learn from that. Learn from that and apply that to your trading. It will save you a lot of headaches. And remember, very simple. 3 steps: level, confirmation, setup. If any of those missing, it means nothing. And also about the simplicity. Remember, could that be simpler? No, but it has to be simple, which means clear and clean. If it is, it's tradable. If it's not tradable. Could it be more complicated? Yes. We always can make it more and more complicated. It's in our head. Have a wonderful week. Thank you for being here, and I wish you all the best. See you tomorrow.